What's going on, guys? Peter Zhang here with Chris Nagy and Haim Bodek. This is a little special SLTV here. Recent big news on Rule 611. Both of these guys don't really need introduction. There's going to be a slight discussion on it and just kind of like where in the world is the market structure world right now. So without further ado, let you guys talk about it and go for it.
Well, I'll start out by congratulating KorTrading. They got a seat at the table. So Chris, got to watch his partner Dave Lauer fight basically everyone else because, as I pointed out earlier, he's seems to be the only, kind of true market reform presence. Everybody else, yeah, I mean, there's some market reform guys, there's some moderates, but Lauer kind of, stood out there in the battle.
Yeah, just a little bit. It was an interesting hearing. Although for those of you who tried to watch it, you had to sit through I think 90 minutes of introductions, followed by another 40 minutes of introductions before you started to get into the meat of anything. I think when the subcommittees started to come on, starting with some of the exchanges, NYSE, NASDAQ, with Whitman and Farley and Selway, that started to get a little bit more interesting in terms of kind of opening up some of the questions that were out there on it. I was really impressed, I have to say, Haim. I don't know if you felt the same with some of the things Gary Stone was saying. I think with his critiques of the SEC staff report on trade-throughs, what's
Yep.
with that. And the SEC didn't have any answers. They didn't run any of the statistics or the.
Oh yeah, that was a little. That was quite bold. Let's just leave it at that. And then we have an industry where you tend not to have the boldest personalities invited to the table, and people behave. So it's very interesting when people challenge those. The elephants in the living room there.
Yeah.
I was actually quite impressed by Tom Whitman. Whitman's relatively new in his position, taking over the equity exchanges at NASDAQ. I knew him from my options days when he was at Philly,
Yeah.
and he was always just so, I guess the word is astute with regard to market structure issues. And I think what was very interesting is how open he was about issues, right? He did not dance around things like the, of course, I love it when someone talks about order types that are designed for a particular,
Right.
function within high frequency trading and that kind of thing. He was very open, and he covered a lot of things, not just the issues I cared about. So I was pretty impressed by his view, and of course I'm biased because I'm an options guy.
Yeah, I got to tell you, I mean, I know Tom Whitman very well, having been former vice chairman of the Philly, and Tom was like when I was on the exchange, Tom was just the technology guy. And the first time I met him, it was on the floor of the exchange. I looked, I'm like, this is one of the smartest guys I've ever met. I mean, he is just so methodical in his approach. And I agree with you. I think really for the first time, because I've seen Tom speak before, I think the Senate committee and a couple of other committees, he really shined today. He came out and made some really good statements about structure, just about some of the technologies that are out there. And he was very succinct with that. So, yeah, kudos to Whitman. I think a really good job.
Yeah, I'm sorry I forgot about your background. I guess it was your subsequent role that I'm more familiar with.
Yeah,
So.
don't you remember when you were in your subsequent role, you tried to pitch me to route options to you?
Well,
Oh, how time flies. That was probably a decade ago.
yeah, definitely. Wow, it's been a long time. So, we ended up in pretty interesting roles now, I think. I mean, we're kind of at the, I think of it as at the forefront. I mean, I've been so pleased with, how since I tweeted this, since 2012, there's just issues that were taboo to talk about.
Right.
And people don't recognize it. It's the whole structure of the debate is now changed. And the other thing I'm quite happy about, and I saw this with, I mean, something that's very important is that there's similarities between, my view, modern markets, and your guys' view and broker responsibility. And we have never seen certain, policies being agreed upon that are reform policies across the spectrum. That's so new a development.
Yeah, it's such a great point. I mean, I certainly remember the talk of best execution. Everyone was getting that when you're talking about broker responsibilities. And for the first time, there's this wave that's kind of building to talk about, brokers can be doing more. We should have more in the way of disclosure with respect to that. And it was, I felt a lot of the political walls with respect to the committee members have broken down. Now, you could see some of the politics surfacing with some of the various members that were speaking. But to your point, yeah, I mean, for the first time, you saw, I think, about the most open and candid discussion that there has been about that. And I think it's a very, very important one because at the end of the day, a lot of the complexities in our structure are because we don't have a lot of the transparencies needed to really quantify some of the decisions being made. So if you have some of that transparency that's put out there, then you can begin to question some of the decisions that are being made with some of the practices, which invariably change behavior for the better. And today, I think we saw kind of a move in that direction. So. Yeah,
no, definitely. I think, let me take a slightly cynical view. It's not actually that cynical, but I think, a couple years ago there was so much worry and concern among, let's say, industry that scrutiny of practices would result in either bad policy changes.
Right.
Regulators didn't know what they were doing. That was that's the cynical side of the industry speaking, not me. They were saying, uninformed decisions, or or really just any type of change. If you're running a business model that's successful, you don't want to see change that could have unintended consequences, right? But now, after this is the only place where I give Lewis some credit, is he seemed to have ignited such a kind of firebomb that it did lead to not only a number of lawsuits and other enforcement action pressure. Okay, I don't want to give him credit for the enforcement actions, but at least pressure.
Mono, basically, is what
yeah. So now the same industry insiders are like, okay, it's going to change.
Yeah.
We better make sure that we're at the table and fighting for the right change. And this is the first time, I think, industry doesn't have a stranglehold over policy, so they have to put forward reasonable proposals.
So I think I completely agree with that, and I think there's one other thing that's kind of happened here. So the kimono's been opened in terms of, market structure could be better. It's not a complete wreck. I think everyone acknowledges that by and large things operate fairly well, but it could be better. What I think has really changed versus if you look back is previously when the SEC would move forward on any rulemaking initiatives, it was kind of like vote by proxy and the rule would go in place. There was no real data per se that would back up a lot of it. The maker-taker rule is a great example of that. I actually remember sitting in post-NMS in Trading and Markets office, and I asked Dan Gray, who was there today, I asked him point blank, so Dan, how did you guys figure out 30 cents was the right number? And Dan kind of leaned back in the chair and said, Island was doing it, so it had to be right.
Yep,
right?
Yep. There's no justification for that number.
Exactly. But what we've seen is, this SEC now kind of gravitating from just making rulemaking based by proxy to kind of moving forward with pilot programs and data-driven analysis. And that's a huge, huge step forward. What that, I think, paves the way for is you can have a lot of these micro tests going on, and the tick pilot is a good example. So if there's any success from the tick pilot of, this one worked, this one didn't, that can be actually used as a model to kind of push market structure forward, I think, in a much more forward-looking and a much more pragmatic fashion than we've seen.
Yeah. The multiple cases there, is important. I'm sure you remember. We both shared the experience of options penny pilot, and
right.
the kind of cynical view there was, have you ever seen a pilot that wasn't approved, right? It's just
right.
just being forced upon. So this idea, that's actually where the real test is for me. If they actually can get to the point where pilots can be done and they're kind of less controversial, to even launch them.
Yeah.
The real test is whether or not they can say this was a failure. We're not doing it.
Yeah. So
we'll see.
Point, which is a valid one. The SEC has done pilots before, right? But they've never said this pilot sucks and it's got to be.
Well,
one I can kind of think of is, if you remember back, the QQQs when that was the biggest ETF that was out there, and it's the number one volume retail traded stock, institutionally traded stock, and it was before NMS, of course. There was that 3-cent de minimis trade through. And that was pilot program, and it went away, but it went away because Reg NMS was implemented. Right? The SEC didn't say this thing sucked; they just kind of swept it under the rug. So, but I think that'll be interesting. The one thing that concerns me, though, about hearings like this and committees like this is, do they really help bring about the right kind of change, right? So if you look back at 20, 30 years of SEC doing committees, and probably the best one as an example is the SEC did this committee called the Seligman Committee, which analyzed, and Haim, you know this, they analyzed all the pieces of market data, market structure. Seligman Committee came back and had, actually at the time, in 2000, so 15 years ago, had great recommendations on market data. Many of the things we're starting to talk again about today, had the SEC implemented any number of those, we wouldn't have had problems such as the flash freeze, we wouldn't be talking about SIP latency, direct feeds, none of this. It's actually all covered in the Seligman report, which the SEC did nothing with. So
that's interesting, because I think I would okay, when you think about it that way, I mean, I was impressed in that the structure of the Market Structure Committee was really meant to get feedback, but they were very clear that the SEC was going to perform its own policy recommendations. So the way I thought of this is that this was a statement that they're going to make changes, and that this is the kind of called last chance for the industry to be constructive. And I don't know how long this is going to go on. That's the way I interpret it. But what you're saying here is that
I go on into perpetuity because
yeah,
2-year term. So put your name in now for the next 2 years. Yeah, and I think it's a fair question, but things move very slow. So I wouldn't expect to see anything permeate for a number of years as a result of the committee meeting today. That's my over/under. I'm going to take the over on it.
Yeah. I think the one other thing, though, just to call about utility. They did mention in there, I forgot who did, that once trade-throughs were being measured and assessed and discussed, maybe there was a causal relationship where people started behaving better. And maybe the reduction in trade-throughs had, some of that impact. So I'm thinking that just having the topics that we discussed today, especially in regard to best execution, disclosure, that's a big one, as you know, a very big one in enforcement actions these days. Maybe we're going to see better behavior just along the lines of the existing system.
You hit on a really great point. I've actually got some stats behind that. So as you know, we follow a lot of broker routings and 606 disclosures, which disclose payment for order flows. And it's interesting because as some of this discussion about best X has kind of been heightened and elevated, in the marketplace, we've seen some really interesting things. So the big brokers are working with this organization called the Financial Information Forum, and they're actually going to start releasing statistics about how well they execute orders on a voluntary basis coming up this summer. And what's really interesting is, in lieu of that, a lot of these brokers' payment for order flows have actually gone down. So most notably, and I tweeted this a couple of weeks ago, in the case of Fidelity, they stopped all equity payment for order flows. They had brought them down the last quarter and just ceased them this past quarter. Other brokers have done the same thing, where kind of payment for order flows have charged down. So your point's spot on that, you know, when you elevate discussion of something, the sheer notion of the discussion can actually change behavior and change the marketplace.
Yeah. I saw. I think I read it correctly that Daniel Coleman of KCG had actually, you know, publicly said that you know, the really attested to the fungibility of payment for order flow and price improvement, and said that the industry could just basically go to price improvement, and that was amazing, because that would have been so taboo for anybody in that situation to say, like even a year ago.
That's right. Yeah.
It's like almost like a dead man. That's something like I would say, you know. You know, or you. So yeah. It's really I think people should be encouraged. I like to. A lot of people are negative in this reform movement about the situation. I like to I guess be honest. If I argue for something, like I've been arguing for a while, I think, as you know, that I want Rule 610 and 611. You know, ban and lock markets is one of the big ones for me. You know, I want to see those discussed in this kind of forum. You know, I argued that in my book, The Problem HFT, and you know, here we are. I guess, you know, a year and a half later, and you know, we're getting there.
Yeah.
You know, it's happening. So I think I have an ethical responsibility to shout out that is a positive step. And you know, I think it's I'm just kind of emphasizing here. There's a difference between, you know, cheerleading and noting to the public the things that, you know, that you and I wanted to see happen 2 years ago. They're happening now, and that's something we should be excited about.
It's really cool, and you bring up a great point, and I tweeted both of these. So Commissioner Stein said something, and Commissioner Piowar said something, and to me, they were one of the most important points during that. Yeah, well, you've got this advisory committee of, you know, the who's who of the market structure landscape. Stein said that retail and institutional wasn't represented. Now, what's interesting, or retail and issuers, sorry, were not represented. Now, what's interesting, if you look at the comment letters received thus far in the Market Structure Advisory Committee, no retail and no issuers have commented yet. Then POR made the statement of he encourages academics and the public to comment. And I think that was probably the most important statement, is that everyone, not just the people on that Market Structure Advisory Committee, has a say in a vote in this matter. And if there's going to be rulemaking done, the SEC is going to read it if you submit it. It's easy to do. You can literally click and do an HTML form and just type it out, and they'll listen to it, and they'll actually incorporate it into any rulemaking. So, you know, from that perspective, it's really important to get a lot of these comments on board and comment to the SEC. And I know you have, and we certainly, you know, lobbed in our 30-page comment letter today with Dave's testimony. So.
Yeah, it was kind of interesting, because when I submitted mine with Peter Kovac, there was only one letter posted, and you know, I've been told, you know, maybe we've had this discussion before, but you know, my understanding is that the policies internal to the you know, the SEC works and Trading and Markets Division is that you know, comment letters are rigorously reviewed. And for many of the rule filings, there just might be just one of them or two of them, or you know, often there's zero.
Yeah, well, there's generally 100 SRO filings each month, and I actually looked. So I was going to do, for our newsletter, I was going to do a write-up of all the comment letters received for the preceding month on various rulemakings, 0 last month.
Yeah, yeah, exactly.
About 100 SRO rules filed. So yeah, we got a big problem there. And then generally, from like just the private investor side, I see 2 individual investors come up, which is that RT, and I hope I don't butcher his name, Luckenflower. And then
Blue cover, I think, actually.
Yeah, that's right. And Suzanne Shadow are the 2 only like individual investors that I ever see kind of.
Yeah, and RT, he's so interesting. I've had some interactions with him. He's you know, he's kind of an insider, so we don't know his full background, but you know, I don't think of him as
totally out of the weeds.
Yeah, but so we had a flux of comment letters hit, you know, yesterday, and then you know, yours hit today, and I think what's so interesting about them is you know, first of all, about half of them that came in really weren't even focused on Rule 611.
Right.
You know, which is okay because it's a general pool for market structure. But you know, this is the first market structure meeting. But I guess the other thing that was interesting is that you know, we saw called lobby groups. We saw certain players, but what we didn't see, you know, certain exchanges, I think SIBO actually, very good points in their letter. But we didn't see letters from firms I would have expected, actually. You know, most of the banks did not submit in.
Right.
So, you know,
no issuers, no retail at all. And it's funny because it was bannered all about, oh, you've got to have retail on the committee. You'd think you'd at least get a retail letter saying, how come I'm not on the committee? Didn't even get one of those.
And by the way, the comment letters are getting some good press. I mean, my stuff's been quoted. I wasn't on the committee. I wasn't. It's great you guys got invited to the table. I'm hoping just if I had my way, ban and lock markets. I would love to get the invitation that you guys got for that topic. But yeah, so it's
more meeting time. You never know.
Yeah. So if anyone's out there with some sway who is watching this video, I'd love to be invited to the ban and lot markets panel.
Just jumping into frame here, just wanted to really just level with you guys. Like, both of you come from inside the industry, and now you are at the forefront of the advocacy level and helping the markets. You guys are dealing with politics all day. You know, what's more humane here? You know, what's more real to you? What's is dealing with insiders and dealing with the industry worse? Is it politics? Like, how is navigating it? What's life like for both of you here? Is it much changed?
I think it's the best it's ever been. Would you say that, Chris?
Yeah, I'd actually agree with that. And I think we actually talked about that a little bit, how both of us just can't believe how open some of the communications have been, where, you know, in the past it would have been taboo to even bring up a topic. And for the first time, we're actually seeing an open dialogue, which I think is very important in terms of pushing things forward the right way, which doesn't necessarily mean adding a whole bunch of rules. You know, it can be stripping out a bunch of rules, actually, if, you know, you get people not acting like infants, right, and acting like adults. You don't need to have a whole lot of rules, right? So that could be the optimal outcome.
Yeah, I know the retail trader, the prop traders are not as, you know, probably don't know the details of the things that Chris and I are talking about. You know, when you say Rule 611, you're either a market structure wonk or not, I guess. You know, so but I don't think the message to retail traders is that they have to know all this. You know, I've been educating for a while, and I think it's more important that that the SEC, you know, manages these changes, whether or not they're additional rules or eliminating rules, and that there's enough pressure on the topic that, you know, people who are not necessarily being upfront about the issues either step away and let people who are in, you know, or they get called out. And that's what's so incredibly important about today, is that if someone said something that was called blatantly defensive of industry and kind of moving away from like the real issue, they would have been called out in Twitter in 5 minutes.
Right.
You know, it would just been all over, and that's and what the retail traders should be doing is really watching frankly for the names, right? When people get called out, you know, then you kind of know that's somebody you may be, you know, may not want to take as seriously as someone who's backed by the industry. And that's another, you know, you get back to the politics. What we're seeing now are kind of call it the smart insiders, are they're kind of picking horses right now. They you know, and they're starting to point out across the spectrum who is the legitimate voice. And then I guess that's how politics works, but it actually makes things easier. It's better than the stalemate we've been in 3-4 years.
Right, right. Yeah, that's a great point. And on the point of Twitter too, if you're gonna tweet about it, you haven't written about it, be a good idea to write about it, you know, rather than just tweet about it. Get it on the public record.
And for those that are like in the opposition, you know, I'm assuming that there are big firms that don't want the changes to occur. Like over time, you know, hopefully all the advocacy comes out to positive outcomes in the market. What happens to the participants? I mean, what if someday PFOF were to change up a little bit and retail were not feeding certain participants? I remember, Haim, you know, we were working on another project, and you were like, these retail orders feed all these people in the markets. You know, like what happens to liquidity?
Now, let me jump in there. I want to say two things here on the kind of like, they call it the opposition. The first thing I want to say is that there's an interesting kind of dynamic here where there is a whole class of you know, called high frequency trading groups that don't actually have these off exchange payment for order flow relationships, and they want to trade with retail, and you know, in a kind of weird way, they're arguing for the same kind of free market and, you know, elimination of side deals that let's say market reform advocates would. So you're starting to see some dynamics where you know, it's harder for a firm that's engaged in off-exchange side deals, you know, where there's just two parties who are, you know, exclusive 7-year order routing arrangement without naming any particular bank or firm. Right? Those guys, that you did not hear them today. They were on the sidelines. You know.
Yes.
You know, when I say those guys, I mean people who would support that type of activity. There actually was a firm there that was.
There was one.
Yeah, but so that's one thing. The other thing I want to say is really going to give some, you know, kind of a shout out to the selection process for the SEC. There's been some criticism there, but you know, one of the players there that I was really excited to see was Joe Mccain. You know, he is a straight shooter, and he's recently joined Barclays. You know, Barclays has got some really bad press from some practices on the New York Attorney General case against them. But Joe, who joined them recently, is, you know, the kind of guy who really deserved to have a seat at the table, and I was excited to see his presence legitimated, and you know, I think he's going to have a positive effect on Barclays.
So I shot Joe an email right after he finished his introductory speech, saying great job, because he was, you know, talking about data-driven analysis, and he actually responded right away saying thanks. But what's neat about Joe, to your point, and you and I have both known Joe for a long time, is that he does have retail experience. He does have internalizer experience. He's got experience working at an exchange, and that's exactly why Barclays wanted to bring him in, because here's a guy with an impeccable reputation that not only is his reputation impeccable, but the vast majority of the industry actually trusts him, as he's, you know, a straight shooter, level-headed guy. So it was really great to see him at the table, and I thought his comments were spot on and very succinct today.
Last but not least, obviously you guys have been doing a lot of work here, and you know, it's very different from you know, going to a firm, getting a job, and all that. And you guys are pretty much like underdogs / superheroes. And obviously, Haim, I see that you've got a little Batman back there. In honor of the recent release of Age of Ultron Marvel, what superheroes do you guys connect with the most in the way that you guys see yourselves navigating and acting in the markets here?
I'm going to answer that. Okay. I love the movie Kick-Ass. I love the comics.
Nice.
And you know, you don't know if you're going to get the crap beat out of you when you step out the door in this kind of role. And you know, this isn't you know, we don't have superpowers. So it's actually you know, a lot of I guess both with Chris and I and you know, Dave, what we collectively do is we take a lot of reputational risks, and we go out there with this underdog view, and we've taken our hits over the years, but you know, I guess persistence is starting to pay off.
So my favorite theme park to go to is Universal Studios Islands of Adventure, and my favorite ride is the Incredible Hulk, where you get shot out at 40 or 50 miles an hour, you know, straight up, and then immediately upside down, and that's what I feel like every day fighting market structure. So you know, it's you've got to take that. You know, I'm the Incredible Hulk when you tackle market structure issues.
Yeah, that's my 10-year-old's favorite ride. My daughter loves that ride.
How can you not like that ride?
Yeah.
Awesome. All right, guys. Thank you so much, Haim, Chris. It's always a pleasure.
Likewise.
You guys, another great round with market structure whizzes here. Have a good evening. Over and out.
Okay, thanks, guys. See ya.
Yep. Bye.